Welcome to this week's special presentation titled Preparing for a Market Breakdown. My name is Todd Shaffer, Manager of Research. I'll be your presenter tonight. The VectorVest Composite continues to remain in a channel, or moving sideways. A few economic events could definitely move the market in either direction. How should we prepare if it should move lower? Well, that's what we'll discuss tonight, and you might expect that conversation would start with market timing. Let's move into the program. Beginning on the home page, even though we had an update today, mixed market of course with the Dow just slightly down, the color guard really tells the story in what I call the Christmas tree color guard, where we're seeing red, green, and yellow all on the color guard at the same time, and we've seen these quick oscillations of the primary wave up and down. These are yellow flags that we're in some kind of a sideways market move, and if we take a look at a market timing graph, here we can see that price has really been channeling since the end of May. And it has been at times with some volatility. But let's zoom out to a 1-year time frame. We'll take off our sub-indicators for the moment. As you're probably aware, at VectorVest we advocate that trading with the market's trend is the single most important thing you can do to improve your trading success. So we see here the market, it can trend higher. It can trend lower, and as we see now, it can also move sideways. Well, the uptrends are great for bullish trading, the downtrends are great for bearish trading, but in these sideways movements, these can be great for income or neutral trading, or simply sitting in cash, waiting for the breakout either to the upside or to the downside. And of course, tonight's focus will be, what do we want to do if we break to the downside? Because that breakout lower infers a new trend, hitting a lower low and a lower high. In the Successful Investor coursework, we teach our baseline approach, which is very prudent, to buy high VST stocks long when that market is trending higher, particularly those with rising price and earnings patterns. We manage those positions with our VectorVest stop and several adjustments as the trade develops. We stop buying during falling or non-trending markets. In our Successful Investor coaching group, we build on those principles and concepts and apply them to falling markets. We sell short, low VST stocks with falling earnings, or buy contra ETFs, those that move inverse to their underlying. A little more aggressive approach than our baseline approach, particularly because bear markets tend to be faster moving with higher volatilities. So we need to adjust our tactics. Here's what we do. We teach our clients to take a systematic approach to their investing, whether it's bullish or bearish. Develop a trading system that puts the probabilities of success in your favor. We use this diagram to illustrate our bearish approach. On the outer ring, these identify our goals, techniques, and mindset from a strategic level. When we look at the bearish model, our goals still are to outperform the market, but our techniques now turn to more swing trading technique where we're going to short the market or trade contra ETFs. We still have an end-of-day mindset where we don't want to become day traders, but it is going to be a little more aggressive than we have on the bullish side. These inner pie slices represent the tactical rule set that we use or we follow when trading to the downside. In this case, when to short, what to short, and when to exit. So our trading system is when to short when we have a confirmed down call and we have a red light in the price column. We'll become less aggressive as we approach the bottoming phase of the market. And we enter our positions on the follow-through of both the market and the stock lower. On the what to short, it's just the mere opposite of what we do when we're going long. We're going to short stocks with steadily falling price and earnings, or we'll buy contra ETFs that are an uptrend. When to exit, we use a 20-day moving average as our initial line in the sand stop, and we'll adjust, of course, as the trade develops. We'll close all of our bearish trades on a green light buyer signal. In this particular instance, as we saw on the home page, we're already in a confirmed down call situation, but we're not trending lower. we're in this channel. So we're looking for a breakdown out of the channel, and we'll begin taking bearish positions on red lights when they follow through. So how will we find our candidates? Well, we'll lean on the power of the Unisearch tool. Now in the coaching group, we have created our own custom search. Here are some of our favorite bearish searches from the Unisearch tool. Doug's Downers, Oddfellows Short, worst stocks above $20. And for our contra ETFs, worst performing contra ETFs. But as we like to say in Successful Investor, no matter how you generate your list of candidates, you need to look at their graphs. First, we'll just look at the searches, and then we'll take a look at some of the charts. So back in the program, we're in the Unisearch tool. Let's scroll down on the groups list, and we'll find searches short, where we house most of the short searches in the database. And we identified Doug's Downers as one of our perennial favorites. And remember, for bearish trades, we look for stocks that are weak, that are losing money. So if you look at some of these parameters, earnings are less than 0, earnings growth rate less than 0, stock price above 5, there's a version where we have higher prices, but of course, the higher the price, the more likely you are to find inventory at your broker. We want to sell recommended stocks with RS and RVs both below 1. And we're going to sort earnings yield times relative timing, ascending, so low values, the lowest combination of those two indicators. So if I run the search, here are the results. Let me move this toolbar out of the way so we get more room. Look at some of the RV scores, the RS scores, well below 1. RT scores, well below 1. Sell rated. Is anybody making any money? All of them have negative earnings growth and negative earnings. And that's how we get to negative earnings yields. And we're combining that with the RT with the lowest combination. And we have that calculated value in that first column. So just to get a feel for how these perform, of course, we're searching on today's date. Let's just return the top 10. I'm going to jump over to the market timing graph. Let's just look from the most recent high on May 20th. So we're going to search May 20th just to see how they've done since that high. And of course, we've been in this sideways move. We haven't been trending lower, but we'll just try to benchmark some of that performance. So let's go to the May 20th. Here are the top 10 results from the 20th, which was an up day, by the way. We'll quick test them all. And here's the idea, right? We had 2 stocks that finished higher, 8 stocks that finished lower. So in this case, 2 losers, 8 winners. As a basket, the basket was up 21.43% on average versus the VectorVest Composite, which was down 1.5%. And of course, that's the goal. Continue to make money in the portfolio, even though the market is moving lower. Let's take a look at the next search that was on our list, which was Oddfellows Short. This search looks for stocks that are over $10, that are not a buy rating, have more than 200,000 shares of volume. The combination of VST and earnings yield divided by RT. But then we're going to sort them ascending. Again, that ascending sort is pushing to the top of our list the weakest of those candidates. And so we have, again, very low RV and RS scores, very low RT scores. Everyone's losing money, and they're losing it at a faster clip. Of course, I'm still running this search on the 20th of May. Let's take a look at the quick test for these guys. 7 winners, 3 losers, a gain of 14% on the basket. Let's go back to the searches and we'll find worst stocks above 20. And this is pretty straightforward. Stocks with a price above $20, above 100,000 shares, average volume that are sell rated, and we'll sort them VST ascending. So running that search. I think you're starting to see the theme here: low RV and RS scores and RT scores. All sell-rated stocks, earnings per share, everybody's losing money, everybody losing at a faster clip. Oh, with the exception of Beam. It actually has positive earnings growth rate, which means they're losing money at a slower rate. Okay, but let's quick test them all again from that high. Here we have 60% winners for losers, average gain of 10 2/3 relative to the VectorVest loss of 1 2/3. So remember, I'm simply showing this quick test to demonstrate potential here. And of course, iron moved against you 37%, so money management is going to become important to us here, which is why we need our tactical trading rule set. Finally, let's go to our ETF searches. So we're going to leave the searches short group and go up to the ETFs group. And probably the two most popular searches are buying contra ETFs and worst performing contra ETFs. Both of these, we'll start with buying contra ETFs. Remember, these will be bullish trades. We're looking for these contra ETFs to be rising because we're going to buy them long, even though it's a bearish trade. I'll share a resource for you if you need more information on either shorting or buying contra ETFs. But here are the search parameters. We're looking for ETFs in the short ETF industry, contra ETFs, that have a minimum price and volume. Volume is very important on ETFs in general. And we're sorting VST ascending. So we're still sorting to the lowest VST scores. We're still sorting the low RT scores to the top of the list, since ETFs have RV and RS scores of 1 to keep them neutral. So these two searches, buying contra ETFs and worst performing contra ETFs, are both looking for contra ETFs that are coming up off of their lows. So particularly at their turning points. Right? So here on worst performing contra ETFs, we're still looking for the same ETFs in their industry. This sort, however, is RT times CI ascending, so the weakest combinations of RT and CI. Now, if we just run that search as written, we'll see that we can get triple leveraged ETFs in the mix, which may or may not be fine. We in Successful Investing advocate that you avoid triple leveraged ETFs. And so you could simply come here to the watch list and add that we're going to exclude triple leveraged contra ETFs. So stock watch list does not include triple leveraged ETFs contra or contra contras. And if I run the search again, it looks like we did still have one sneak through here, but we have eliminated, by and large, those triple leveraged ETFs. I also notice that there's a lot of overlap. In other words, there's several of these ETFs trading NVIDIA or Tesla, SSG follows the semiconductors. So you want to make sure you understand what the ETFs are tracking and support diversity or diversification in your portfolio. Now, I also notice if I look at the RT values, right, somewhat low values because, of course, NVIDIA has been continuing to rise, and so it's at the top of the list by having the lowest or low RT values on the contra. So one of the ways to work around that is I could change my sort from ascending to descending, and now this would bring to the top of the list contra ETFs that have higher RT values. Trying to find ETFs that have at least made the turn and are starting to come up off of their lows. Now again, I still have a lot of overlap here, but just to stay consistent, let's quick test these guys. Because we're long here, then we actually did have only 4 winners, 6 losers in this time frame since coming off the market high, because essentially we've moved sideways and these index-based ETFs haven't performed that well, but we're about flat with market performance. As I mentioned earlier, no matter how you generate a list of stocks, whether it's through the Unisearch tool or any other source, you want to take a look at its graph before you trade the stock. So here's the search results for more stocks above $20. What do you look for? Well, let's take a look. I'm going to graph them all. I'm going to start with a 1-year time frame. And let's just start with the VectorVest simple layout. And then we can modify that layout to our needs. So the first thing, we'll take off the VectorVest stop price. We'll take off RT. And let's add a 20-day moving average to the chart. And let's also add support and resistance. Technical analysis, support and resistance. What we're looking for is stocks that are in steady downtrend with earnings that are in steady downtrend. That's the idealized setup. The support resistance lines can help us identify when the stock is near or at a support level, because we'd like to be clear of support. So ARCT, not a great candidate in my view, because the price has been moving essentially sideways for the past year, and earnings is actually a little bit better than it was a year ago. They're still losing money, they're just losing less of it. But we're going the wrong direction. Who's next? IMCR. Better, right? Price is lower on that year-over-year basis. We're certainly in downtrend. Remember, the market peaked in February, so I'm not surprised to see stock price rising while that broad market's rising. But now, since that peak, we have been selling off, and that's the direction we're looking for. So let's run the drill. Price is lower than it was 1 year ago. It's in downtrend, hitting a series of lower highs and lower lows, free of support. It has bounced here in the last several days. Earnings per share, though, has been dropping and is continuing to fall. If we come into the 3-month time frame, we're still operating below the 20-day moving average, which would become our initial stop loss. But to be fair, this thing is on a bounce. I'd feel much better about it if we took out this prior low and continued that downward price trend. And because of the shorter swing trading nature of these trades, I often like to start with the 3-month period just to confirm in the near term price has been moving lower, as have been earnings. So as we just scroll through some of these candidates, earnings is doing the nice pattern, but look how price is consolidating on PHVN. ESTA has earnings trending the wrong direction. Here's one, APGE, with earnings trending lower, price trending lower. Again, I'd like to take out this prior swing low, break through to the downside, continuation of trend to the downside. CGON. Have you noticed that a lot of these are in the biomed space? So that industry in particular not performing well in this market consolidation we've been in. But here we have the earnings pattern in place. Can we resume the lower high and the lower low for CGON? And do I have enough space between current price action and potential support at the prior low to make gains to protect? So let's go back to IMCR, probably the best example of what we're looking for. Price and earnings are in the right trends, the right patterns. Price has bounced off of this low over the last 3 sessions, but we're still below the 20-day moving average. If I put in a lower low on a red light in the color guard with the VectorVest Composite moving lower, I can short the position and use the 20-day moving average as my initial stop loss. Then I can adjust that line in the sand stop to help me lock in gains or minimize drawdown. Now let's flip the script and talk about those contra ETFs. With our descending sort, let's take a look at our graphs. So same setup, we're taking off the earnings per share though, because ETFs don't have earnings per share. Same idea, let's look for trending price action, higher highs and higher lows. In this case, because we're long now operating above that 20-day moving average, but as I zoom into 3 months, we're still interested in taking a more aggressive or swing trading approach to trading this position, and I'd like to see price continue to follow through to the upside when I take my entry. So as I scroll through these others, and I'll back out, you often see this graph pattern for bond funds, so that's whispering to you lots of volatility on CGSD. And here's the Dow Fund, DOG, moving in that sideways channel. So if the market breaks down, DOG should break out to the upside and will become a nice potential play. Now, I promised you some resources if you'd like to learn more about contra ETFs or shorting stocks. So let me share those with you. First was a special presentation done by Jerry D'Ambrosio back on August 16th of 2023. You can find that in the university, the ABCs of selling short, and that's all about shorting stocks and your brokerage requirements, etc. Very thorough, good presentation. And a presentation done by Steve Chappell, the ins and outs of contra ETFs, from August 19th of 2022. Identifying stocks with rising or falling price patterns couldn't be easier when you have VectorVest. The VST system identifies great candidates for all disciplines. The graphing tools make it easy to confirm the best choices. And that makes it easier to prepare for market breakdown. Thanks for watching.